Morning all. I'd like to welcome you to today's meeting of the Finance and Service Committee meeting. I'd like to open. We've got two guests. So I'd like to ask Councillor Kneebone. Tanga, sorry.
Morena tātou ane. Whakatakati hau ki te uru, whakatakati kina kuta, mā tāra ki aki ana te atu ki he hoku, he hau hu, te hei Māori ora.
I'd like to now call for disclosures of interest, please. Sorry. Okay. We have a mover for that. Thank you, Pam. And disclosures of interest. Those if not, I'd like to. Okay. Right, matters arising from these meetings. Keen on that. Let's follow through on that.
Chair, and good morning. We've captured in here the previous meeting, mostly around to a large extent we did noting the information other council staff are working on.
Right. Emma, you're at a place at the end of the table.
I'll introduce. My name's Emma Kellett. I'm the Principal Advisor Sorry, I'm just going to share the dashboard now. All right, so essentially what we have here is Te Ara Tupu is our rework of the corporate plan. This measures against our 5 key focus. So this framework here essentially promotes us working together. It aligns us with and sort of highlights the area. So I'm going to take the report as read, and I just want to open up the opportunity that you may have that will jump into the dashboard that we're currently.
Sarah, it doesn't look like there's any questions around the table, so you've convinced us all, so we'll keep it with you.
So this dashboard in this iteration, it was released on the 31st of March, and we have had a couple of updates to it since our first release. So what we're looking at here is our main screen, and you can see across the top our 5. Our 2 areas, excellence and innovation, currently under sort of work in those spaces. So the results reporting there are not that accurate, but we do have our culture, custom, our Māori area. We're looking at. So taking a bit of a closer look at our culture, we can see we've got 2 on track, 3 that we need to. Diving in there. In the screen here, we have results that are reported next to each of our different measures. So these results are worked out differently, and they're all against different targets depending on what. So our first 4 measures that are in there, these all our pulse day. Hover over them, and our current WRC wellbeing rate, as you can we have our target, which is the dots, and then we can do our every 6 months, so our results are updated. And if you have any questions, just fire them at me. Our Director of Wellbeing Support, this one's actually increased. And just as a note, we have just recently currently our next results, so updated results in there. Employee engagement here has increased, but it's still not quite at that target that we set. Moving down to our absenteeism rates, this here, as you can see, over time, we are meeting our target rates. This one here is an important measure from a finance perspective, but the reason it's sitting in is specifically to do a lead measure of how people are being managed, high leave balance, and so we just want to take leave when they need. This one's about creating a culture.
So the red alert. Yeah, because you're. So December was one, well, it should have been 8, is that what it's?
Yes, so we've set ourselves a really low target, and we would like to have 8 or less people in the organisation with over 200 hours annual leave. In this case, you can see that in December, we had over 40 people, 204 hours or more of leave. We have worked a little bit to get that down in the summer leave period, helped with that, but after the floods and the recent events, we've had people that have had to give up some leave that may have been booked. This sort of increased our leave balances again. So we're hoping that over the next few months.
The red alert comes up.
Yes.
Target.
Yeah,
Okay,
so
that's
it will
what's
come
coming
up when
out, yeah.
we're quite far from our target. If we're close to our target, then it'll be a yellow just situation.
In May's because we haven't got.
Yes, so we report the May results. The following June, we will have. That just gives managers a month between report, work on improving.
I was just going to make a comment that the point of these dashboard are we and effort into information what's coming out of. So it's giving managers. And I don't know if you've area recently dashboards. Down into different directorates. So one of these like annual leave balances. That and we've been working on get the number of 6 weeks going that because we've had people leave off to and been a challenge is making some progress. A lot of our field staff. But this is the sort of thing I guess keep a focus on.
Thank you, Chris. And maybe if I can just comment too, a couple of points. Is there any flexibility in your 8 level? Because reading through further through the report, evident that ability to recruit at the moment has been for some time increasingly more difficult. Means that people are having replacement, and that's going to time. And I don't see that as not good for the individual, but it's not really negative. It's not.
Yeah.
And the other point, which is something which is considered in the risk committee, I want to encourage people to take the through having,
Yeah.
and particularly more. So there's other reasons other than well-being of the organisation also.
I can just show you, we can drill down to a direct, which is helpful for our directors to see which results came to their direct. At the moment, we're looking at just an over WRC as a. If there's more questions on culture, we can jump.
It just, and sorry to dwell on the annual leave thing, just I want to make sure I've got my perspective right. Can you write that annual leave one again? So when we're seeing the 34 to 41 range there, that's out of how many staff?
600.
600,
So
right.
that's
So with
very good
8
target.
being our target out of 600 staff, what's the rationale? 8?
I think that this comes from the CE's KPI. Is 0.
I guess I want us to make sure that we're
Yeah.
seeing
Really?
this in perspective of,
Yeah, we have set ourselves a low target, and a previous KPI was that we had a target of 0. So we have allowed some leeway, but I don't.
Yeah, it's certainly not a KPI target. I think this is something that ELT and the previous committee would like to see. I mean, we'd like to see everybody take. But I think that it's a target. It's not necessarily a measure of success or not, but we're just trying to get people. And unfortunately, some of the people who are on the list are they're always on the list. It's not like it's a different group of people. So they are key information, but they're the ones that are more at risk if they do fall over.
The key element, I where we do have staff leave management plan in place, and those exceptions. Highlighting it.
yeah.
This,
I just-
Can I just interrupt the meeting for a sec?
Sorry, we're just being told from people online that the sound is being a bit choppy, so if people could probably just please speak a bit louder and closer to the mics, please. Thanks. We're just being told that the online hearing is a bit choppy.
Keep closing up. I was also just going to add that this number also takes into account booked leave. So if someone has a leave management plan in place and they've booked future leave, this number includes that future leave that is booked. So this is looking at a management perspective of an annual leave. But
The only reason I'm raising it is let's be really rational in our targets. Otherwise, you'll end up with red indicators on your dashboard, and let's take note of whether or not that's positive or negative in our well-being. So just want us to be really clear at the target.
Thanks, Pam, and I can only endorse that as well. Shouldn't be beating ourselves up for something we actually performed.
thank you. That's really good feedback, and we are constantly improving the dashboard, and so that'll be something that I'll bring up. But our targets that. So moving on now, the customer base. So see there, our first few scores in there refer to our Net Promoter Score. So this is a survey that we send out to our customers after they've had an interaction with us, and it's been recorded in Iris. So once that interaction is closed, they'll be sent an email which will prompt them to fill out a feedback form. And the information into this feedback form through us nicely provides us with these scores. So we are actually doing pretty well against our set targets for this area. I will just go into the first one here. This is the satisfaction rating. So when we first started this in, I think it was 2016, we had a target of 48. When we brought this onto the dashboard, we decided to increase our target by 2 points. So our target's now 50. And we are, we're got mixed results there, but we're doing pretty well against this target at the moment. and you can kind of see some trends there over time. The next score here is our effort score. So this is how our customers rate us against the effort they perceive that we put in. And this is the trust score. Any further questions?
Sima, you can move on.
The field-based survey is if the interaction is not through Iris, but from a field-based interaction, we provide them with a QR code that they can then scan and fill in a very similar Ask Nicely survey. Still providing that Net Promoter Score. And then our phone call abandonment rate, this is based off if we're not responding to a call and they abandon it.
Could I just interrupt there, please? Levi?
So the field one, do the field staff actually give customers a bit of paper with a code on it, do they? And you can do that at your leisure.
We have a couple of different ways that we do this. So our QR codes were a sticker, and the sticker could be put to whatever piece of information you're exchanging with the customer in the field. So if it was a business card, it could be on the back of a business card. If it's a letter, it could be on a letter. Just a brochure, you can stick it on there. Yeah, so it was flexible so that they could have different ways. And this is how we brought transport into the NPS score. So the transport desk now has a QR code at their desk that customers can use and fill out feedback surveys. Previously, and then
Sorry, Mr. Chair, and if I could just make a comment on it. So when I became chief executive, I tried to put a customer base that, we might think we're doing a service, but we should customer. So from their perspective, how they believe the service. And so the Net Promoter is in the past. It's a measure where you have detractors and support, and you need a pretty high score to be positive. And we've been trying to score the target higher as we achieve. And so the trends over time have the abandonment call. It's the idea that if someone up and can't get through, and they hang up, that's again something I try to put a big focus on, that everybody valued and that they can get through and speak to someone. Right. And you might be well aware we've been and we're going to continue to do so. We are probably just a work in progress is probably some of the offices where the best staff there, someone's going to pick. So we're now looking at those services. A lot of this work, yes, but we're trying to set the bar higher as we get the feedback and we learn. And like to the QR. If some people didn't feel that they had a really useful tool feedback, so we're trying to make that easier for them.
yes.
Look, I really like the idea of that QR code, because I've been at a few things recently where they won't let you out of the room until you, and it just incentivizes you to go tick, 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 tick without even thinking about it, which is,
Yeah, our intent was to give our customers the opportunity to provide feedback, not force them to. So, yeah. The customer experience team. So at the moment, our Net Promoter Score is showing, it's able to show us if we make a change in the way we deliver something for our customers, we start to see a change in the trends. And this, I think, was in the report with the changes that we made with RUD and centralizing their customer support. So, yeah. Just on now. So, is there any more questions in the customer-based area? I just have the last one, which is Te Ao Māori, and I'm just seeing if Marley is available. She was supposed to come in and speak to this one, but I can give you a quick overview. At the moment, we have all of our JMA and CMLA progress reporting into, excuse me, reporting into the dashboard. This is a very new addition to the dashboard, and I think we've only had it in here maybe a few weeks. This essentially shows us how we're performing. Our target rate is having 85% of all of these on track, and that I think we've set quite a good target for ourselves. The details around why we are and are not performing in this space is Marley arrives soon. She'll be able to describe the details around that one. But off the bat, are there any just general questions on this one here?
Thanks, Emma. You've obviously got us all convinced. So, is Marley on her way up? Is she?
I think she's, yeah, I
Or
think
down?
she is on her way.
Okay, so does anybody have any other questions for Emma while she's in the chair? Presentation chair, that is.
Yeah.
I have Mr. Chair. Mr. Chair, I think in the report it does have explanations against some of the JMAs as to why achieving in some of those areas.
So is the meeting happy that we move on, or shall we wait for Marley to arrive?
Yep.
Happy to move on? Okay.
Yep. Okay.
Thank you. So Emma, I'd just like to say thank you for your comprehensive report. There's a lot of information in there. It's very valuable and obviously a good measure of the heartbeat of the organisation. So yeah, congratulations. Keep up the good work.
Thank you. And yeah, thanks.
All right. So thank you. I'd like to move. Resolution is the report of the Ara Tupu dashboard and associated activities update received. I'll move. Stu's seconding it. All those in favour? Thank you. Carried. Right. Next item on the agenda. Thank you, Emma. I'll let you go back to your good work.
Thank you.
The next item on the agenda is the financial performance monitoring and forecast as at 31st of March 2023. And I'd like to ask Janine Becker to present her report, please.
Thank you, Mr. Chair, and I'll just get Catherine Vallander, who's manager of our financial planning and reporting team, so one half of the finance function. Catherine's been authoring the report. Catherine joined us in October last year, so you will see more and more of her, particularly as we move through committee activities and LTP as well. So I'll present the report today, but opportunity to introduce Catherine to you all and for her to get familiar with the feel of sitting at the table, staring down the barrel of councillors' eyes with all the hard questions. So,
for those, sorry, page 18 for those who've got the hard copy.
So turning to the content of the report, as noted, this recaps on our actual financial performance to the end of the third quarter for the financial year, and also provides an overview in terms of the forecast that we have done based on those results. So in terms of financial performance, at the end of March, we're reporting an operating surplus, which is 2.6 million favourable to forecast. After allowing for reserve transfers, the retained earnings position is showing a balanced budget, so very, very close to that forecast. Some key points to note in there. So our revenue is showing as unfavourable by about 1.1 million, and that's predominantly in relation to the investment fund returns, which are behind budget for the year, as we've seen markets wax and wane over that period. But we note that that variance is offset by a drawdown from the investment equalisation reserve, which is set aside for exactly that purpose. From a cost of service perspective, we're reporting $3.7 million favourable. Noting that within there is encapsulated costs in response to the weather events at the beginning of the year. So our flood protection and control group of activities, 2.1 million unfavourable, with that largely relating to that flood response. In that same area of the business, though, noting that we're 2.06 million favourable in terms of catchment management. If we turn to the financial forecast, which was undertaken on those 31st of March results, we're reporting a further favourable outcome for the year of $2.3 million. Of note within that is salary savings of just shy of $1.8 million. So that's a significant contributor. I think it reflects the many conversations that councils had in different forum around staff turnover, difficulty in the current labour markets in terms of being able to recruit and fill positions quickly. And so that's really coming to bear and able to be seen through those forecast results. Overall, what that means for us is that for this year, we are reporting cumulative retained earnings savings of about 2.66 million. And in addition to that, council still has available to it $2 million of surplus funds from previous financial years which haven't been allocated. That includes the return of some funds that had been set aside to advance the public transport business improvement review, which haven't been required, and so they have been returned to that operating surplus position. So cumulatively, surplus funds available for council's consideration in the order of 4.7 million. The forecast also allows us the opportunity to consider where we want to carry over funding from the current financial year into next financial year to allow planned work to be completed. So on page 22 of your agenda, there's a summary there of the carryovers that managers have been signalling over the last two forecast rounds. And so you'll note from an operating perspective, there's forecast carryovers already being signalled of 4.9 million. And then we also have capital expenditure carryovers in the order of 15 million, which is predominantly obviously in that infrastructure capital space. That position has been one where the executive have certainly been turning their attention to. I think in light of the size of those carryovers and the ability of the organisation to actually deliver a planned work program, plus all of those carryovers as well. So that will be something that as a team, we will be giving deep consideration and reflection to, both as part of this year-end process where we see what we've managed to complete this year, but also going into the long-term plan of trying to make sure that we've got the budget provisions right-sized for the work that is currently being done and for those changes in terms of work program that will undoubtedly come before you as part of that long-term plan conversation. But quite a challenge in that space. Finally, just from a forecast perspective, we note there a bit of an overview of our response and the impacts of cyclones Hale and Gabrielle. So at this stage, the forecast only reflects costs that have been incurred this financial year. The team are still doing the work in terms of reprogramming or reforecasting future work programs and how the response to those flood events is prioritised alongside the business as usual work program that was planned as part of the 23-24 annual plan. There will be information from that coming two ways, I guess, to council, both through integrated catchment management, but also through this committee in terms of these forecasting and financial reporting processes. So that's probably an overview. Mr. Chair, happy to take any questions.
Oh, thank you very much for that report, Janine, and I'd just like to, on behalf of council, thank you and the Chief Executive and the team for the result that's been delivered year to date. I think it's an excellent performance. I think in the testing times that we've been facing in the last, particularly the last 12 months, that you're able to come up surplus against budget at this time of the year. So, yeah, well done and thank you. Long may it continue. I guess the area that is of concern is the carryover expenditure and the accumulation of that, and just how that's resolved going forward. And what I'd like to ask the question of what happens to that as we move forward. Is there a cleansing process that we go through to get rid of the carryover, or does it just sit there?
Yes, so I guess that's exactly the conversation that having as an executive team in terms of, I guess I've asked the question of, is it time for a refund? So we cannot continue to carry over funds year on year. We need to make sure that we have work program that is right sized for the capacity of the organisation to deliver in whatever form that takes. Because, you know, we've got these 2 years running now, $3 million surplus. It's better than being in a deficit position, but it's also funds that we've collected from ratepayers that we're not utilising. And so it will be a case of trying to find where those surpluses sit in the organisation and how they back. I think the general observation from me would be that the organisation has sufficient budget each year. So we've got enough money in a year to deliver a year's work. It may not be sitting in quite the right place in the organisation, but it's a different issue to needing to carry forward to year. And so the LTP process will definitely be the opportunity to get those things, but it will be the job over next year to identify where those savings sit and make sure that we're capturing them.
Thank you, Janine. Councillor Kneebone.
Yeah, no, thanks. So to me, it's about, I mean, a lot of these things that we're carrying over aren't what I'd call added extras. A lot of that's quite crucial work that we need to be doing. So to me, the other big part of that conversation, I'm sure you've sort of acknowledged it, Janine, is do we need more resourcing to make sure we can deliver? Because some of these catchment and flood protection infrastructure programs, there's a limit to how long we can defer those for obvious reasons. Yeah.
Yeah, and so the balance, particularly in that space, is from a risk perspective as well, that if crucial asset maintenance renewal work that's needed that we're not getting to, it's the risk side of that conversation to those communities and how. But you know, an annual plan capital works program this year of $27.5 million, we can perform at sort of a $15 million level. So how do we get that extra capacity? Now that's probably going to be contracting in, but then you need staff resource to actually be able to
Yeah, yeah,
manage
yeah.
those contractors.
Um,
Yeah.
the theatre project,
Mm.
and I appreciate our contributions, but, and I could be perfectly honest, this is just pure hearsay. I'm hearing that there's been some escalations in costs, and it's just gossip. But I guess my question is, are we monitoring it in terms of the other parts of that project? They've got continuity that it isn't, that they've got problems that won't impact on us getting value for our contribution, if that makes sense.
Yeah, through the chair. So council's contribution has always been fixed,
I get
and
that.
there's delays. That is one of the genuine carryovers in terms of delays. And my understanding was that it had been a fixed price construction contract anyway. So in terms with Foster's. So I heard issues with that. I think it's certainly not getting any feedback through engagement that I've issue or the request back to WRC for.
The only other one, and look, I appreciate you might know, Robbie, the catchment grant claims down by $1 million. I've sort of don't have that detail, but sort of keen to understand what's driven that, because that's quite a bit of money, and I would have thought, given all the events we've had, that people would have been keen to utilise that. But I'll chase that.
Thank you, Councillor Stew. Angela?
Thank you. Yeah, just in paragraph 25, I'm just wondering if you could expand on disaster recovery reserves. Just, yeah, help me understand a bit more about that one.
Yes, sure. So what council has in place is what is termed a risk financing framework, which has different elements to it and supports our ability to respond to weather events, asset damage. And so that risk financing framework includes the insurances that we hold. So where possible that we can transfer that risk off to somebody else. But it also acknowledges that insurance carries with it an excess that we need to fund. And it also acknowledges that there are some assets where damages, they're uninsurable assets, so plantings and the like, and there will be some damage that's caused that doesn't trigger an insurance claim. So we have two types of disaster recovery reserves. There's funds that are held by each zone, and then there's a region-wide regional disaster reserve. And there's thresholds in terms of event levels that mean that the zones can access either their own disaster recovery reserves or it will tip into the regional reserve as well. It just means that we sit on some funds that enable us to respond and then claim down from those. So the zones aren't being hit by those directly at the time of it happening.
And how are they sort of topped up?
So it is topped up through rates across those zones, within the zones or across the catchment. So they are ratepayer funds. It's just that they sit there to enable us to respond rather than when we've had to respond, capture those sort of on top of.
Cool. Thank you for that.
Thank you, Councillor Strange. Councillor Dunbar-Smith.
Yeah, page 28, we've just been talking here about filling gaps where there's a need to actually do more work through contracting. Contracting services looks like it's pretty much all expended, and the major one there is transport at 24 million. And I just wondered also if you come across to consultancy, there's more spending coming in a consultant for the transport, regional transport connections. I just wondered what that was. And also I note also there's some consultancy spend on management, and I again was just wondering what.
Thank you. I'll ask Janine to provide some answers, please?
Yes, through you, Mr. Chair. So I think in terms of from a contracted services perspective, obviously transport is all of our bus services, and so that overwhelms all of the other information contained in that graph. I think there are probably shades of grey within the contracted services versus consultancy analysis. So the way they should be reporting and the way that staff should be coding those costs is that contracted services is a service delivery choice. So we could do the work ourselves, we choose to contract it out. Whereas consultancy is the expert advice that we receive that we don't hold the expertise for. In terms of the actual detail of the variances, particularly in terms of consultancy fees, I don't have that to hand, and I think it's possibly a level of detail, and my apologies, that we don't have here today. Can certainly find that for you and put it back.
Yeah, just particularly in relation to management. I'd be interested to know if there were managers here who were consultants.
Oh, no. So in terms of what's reported as management, each of our sections and each director has what's called a management code, and that is for the managing of their business. So in that capacity, they will be buying in some expert advice to support them in carrying out those responsibilities.
And the regional land transport, you're hiring some consultant in there to actually help with running the bus services?
It will be around specific initiatives where there's specialist advice that's needed. You know, it could be, there was, you know, submissions yesterday around, you know, EV transition and things like that. So it will be areas of expertise that we need to be buying in that we don't have, but are critical to the work that we're wanting to do.
You?
Thanks, Councillor Dunn-Muswith. And maybe if I can just add, we have been through a period of significant policy development, the coastal plan, which you've been involved with, Ben, the freshwater policy. The external consultants have been used in those projects, and they don't come cheap. You know, using Beca Carter, probably one of the most expensive in New Zealand, but they are the best. So, you know, I'm comfortable with that because we do not have the in-house expertise. And in fact, I was talking to the Chief Executive about a similar thing yesterday. Some of the stuff is pretty complex.
This
It needs good people to be able to get their head around it.
This would suggest they're relatively cheap. It's only about $40,000 sitting in some of these people.
Councillor Strange.
I
Councillor
just,
Cookson.
the last speaker and that it's the resilience, it's the issue of staff, and we're limited with staff, so they can't have time off, but we can't get them to do any more. So that is the issue that we've got. So we got to fix that problem in our organisation, so we can actually deliver our what we need to, and staff get to have their time off and everything else. So we got a big bridge to fill in that spot, especially for those staff out there on the ground that are trying to meet the level of service that our communities want, yet they're actually getting the pressures on them to service it, not us. Yeah, that's real. That's
Thank you, Councillor Cookson. Councillor Strange, you're right. Maybe if I can just comment on that. And I think, Councillor Cookson, you were at the meeting where we had a discussion about future planning and staffing and recruiting and cadetships, which I really support. And I think that's a long-term fix. It's not going to happen overnight, but the plans are in place, and I'm comfortable that those issues will be dealt to in an efficient and effective manner as the organisation moves forward. So we're in a difficult situation at the moment. Everybody knows what the employment position is like, and it is difficult. So, you know, management have my sympathies. I'm certainly not want to be critical of them in any way, shape or form. Thank you. So, resolution, financial performance monitoring. Car says at 31st of March 2023. Do I have a mover, please? Councillor Nebo, and seconded by Councillor Cookson. All those in favour? Against? carried. Thank you. Next item on the agenda is the third quarter non-financial performance results. Once again, our finance boss is going to sit in the chair.
I'm going to hand over to
Oh,
Haven for
Thank
this
you,
one.
Hayden.
If there's anyone in the committee who hasn't had the opportunity to meet Haven before, so Haven is the corporate planning manager. So working hand in glove with the finance teams around our statutory planning and reporting functions.
Welcome, Haven.
Thank you, Janine. Good morning, Mr. Chair. Good morning, councillors. So yes, this report is to present the third quarter non-financial performance results. So I'll just provide a brief overview of the paper and invite any questions and discussion. So as noted in there are 51 performance measures in our LTP that we report on each quarter. And of those, there's no result available for 5 of those measures as we're still awaiting data. Of the 46 remaining measures, 4 are achieved, 31 are on track, 4 are to be monitored, and 7 are off track. So just to quickly highlight those measures that are off track, starting from paragraph 13, there's that one on reducing the trend in coverage of eradication pests. So it highlights here in the report that the bad weather is the main reason that that measure's off track, as contractors and workers haven't actually been able to get in there and do the work. However, that one is forecast to be achieved at the end of the year. Next one along is the percentage of arrivals at bus stops that are on time in accordance with the timetable. So we're not quite meeting the target for that one yet. However, we can see in the report that the performance is trending in the right direction. And again, this one is another one that's been hampered by weather, with road diversions impacting some of the services. Okay, the next one along, in paragraph 15, the percentage of customers who are satisfied or better with the bus transport service. Again, we're not hitting the target for that one. However, the report does note some projects and works in the pipeline that we think will help improve the performance for that service. Okay, paragraph 16 is around the category 1 aids. So there was a period of time, 44 hours approximately, where there was an aid that was not operational. My understanding is there was extra time needed to bring in an external service agent for that repair, and we didn't yet meet that 24-hour time frame. Okay, we're getting towards the end of these. There's the percentage of one-on-one contacts with recreational boaties. So again, this is another one that's been impacted by the weather, just with less boaties out and about. We don't believe we will meet that baseline of a 20% increase, just with the weather we've had. And paragraph 18, the one there noting that the regional coastal plan was, there was a decision made to defer that in May 2022, so we haven't met that there. And then the last one down there is the rolling average net promoter score. So my read of that is that it looks like we are improving in that one, and it's just been pulled back a bit from some of the earlier results. So yeah, that's a brief overview of the report. Happy to try and take any questions, although I might need to lean into Janine if there's any very tricky ones.
Thank you, Haven. My only question, it's not really a question, I just note that we neglected to notify Maritime New Zealand, point number 16, about the breakdown of the beacon. I can understand getting a contractor out there in adverse conditions is going to be challenging, which is not really, we can't do much about that, but we can fulfil our obligations in terms of notifying Maritime New Zealand. So how have we changed our behaviour to ensure that notifications made on time in the future?
Yeah, I did spot that one myself. I would need to loop back in with probably Brent and his team to understand any changes that they're looking to do in that area. I don't have that understanding at hand. I don't know if Janine, you have any comments there?
I might be able to help. My understanding with this one is that for some reason, not exactly sure why, Waikato District put that navigation aid in and replaced it several years ago. So it's not on our capital books, I understand, which has led to a bit of a problem in us not knowing that it was working, But B, that in terms of there not being, probably parts, to be able to repair it if it went down straight away. I think it's something that we're needing to fix. I do know that they, when it went down and when it was aware, they were putting out pans on the Coast Guard all the time to make people aware that the aid was down. But I think there's something odd, possibly related to the old Raglan Catchment Board, why they've still got jurisdiction for ownership of a light. Have I got the right one, Haven? I think there's something in the background about that.
It sounds similar to, I think I had, heard Brent mention something along those lines as well.
I will take that and
Thank
in
you.
terms of the corrective actions.
Thank you, Janine. Thank you, Chris, for your
And,
comments.
and through you, just I've got the microphone on. So these targets are set in the long-term plan, and they kind of stay there for 3 years. And why not just highlight that we're not quite meeting this year is that the Net Promoter Score one, because we heard from Emma earlier on how we're doing as an organisation against a range of things. This is one which is specific to one little area of the business. Now, why that got picked out for the long-term plan, I'm not, as a target, I'm not too sure. And it's got a very, very high score of target of 82%. As you see, as an organisation, we're sitting at around 50%. So why this had a particularly high target, I'm not sure, but it sits there every year through this LTP.
Thank you, Chris. Councillor Dunbar-Smith.
Oh, it was just on that type of issue. If we set things through the LTP, we've got a very resilient customer base here for buses. 87% are happy with the service, even though not all the buses are arriving on time. So we clearly don't have the same problem Auckland does with ghost buses. But I just wonder, should we be resetting that 77.5, or is that a target? So obviously some of the transport team would know more about.
So yeah, there's the opportunity to reset those targets that will be coming up through the LTP discussions throughout the year.
Thank you, Councillor Dunbar-Smith. Councillor Cookson.
Markers, there was quite a bit of discussion with that yesterday also in environmental performance about how many markers had been moved and through the storm events of Gabriel and all the other 3 of them as well. So yeah, there was quite a big discussion on that yesterday.
Thank you, Councillor Cookson. Are there any other further questions for Haven? If not, we have a resolution. 2022-23 third quarter non-financial performance results. Thank you, Councillor Story. Second for that. And thank you, Councillor Cookson. All in favour? Against? Carried. Thank you. We now move to agenda item number 9, which is the Mercer Investment Monitoring Report, which is 10:25, and we're pretty much 5 minutes over.
Mine's with us.
Oh. Brian.
Good morning.
Morning, welcome.
Thank you very much.
So, I can hand over to you, and you can lead us through your presentation, please.
Perfect, will do. And yeah, please let me know if there are any questions. So Q1 of this year was a positive one for markets and positive for the portfolio. I think you'll remember when we spoke last, we were in the middle of a bit of a rebound, and I said, well, let's hope that it reflects in the value of the council's portfolio. And it certainly has. So we had a bit of a bounce back, and we'll go through the drivers of what caused that. But ultimately, we ended the quarter with the long-term fund being 91.2 million and the low-risk fund at 9.6 million. So, and as for those of you that have looked through the report and seen the reserving chart, you'll see that we're getting back towards the comfortable place that we like to be, where the portfolio is above its inflation reserve and in healthy territory, as you have been for most of the last decade. So a bit of a blip in the markets, and we riding it out. Things are stabilizing a certain amount. Can I just check what page the cover sheet of my is, so that I can calibrate?
Page 55.
55.
53 is the very cover page, Brian, yeah.
The one that says quarterly report.
Yep.
Perfect. Thanks. Then I know where I am. Great. So turning to page 55, you can see these are the market returns as always, dark blue being the quarter, so the first quarter of this year, and certainly quite an outstanding quarter. So that's really just the markets breathing a bit of a sigh of relief that inflation seemed to be coming under control. I think markets are generally in consensus that we're in this sort of limbo period where the lagged effect of all central bank policies is starting to come through. So really no action from the central banks will still result in the effects of the last year's interest rate hikes flowing through. So a bit of uncertainty in terms of what that means in terms of economic pain, as interest rates flow through to mortgages and the like. Obviously, that is exactly the effect that central banks need to start bringing inflation under control. But inflation has already sort of peaked and is coming under control. So it's really a waiting game to see just how much of this lagged effect of interest rate rises, how much that stems inflation by reducing economic activity, and whether they've stepped too far, which is really the feeling that we felt in Q3 and Q4 of last year, was markets reacting to the swift rises from the Fed and other central banks. The message in Q1 was very much that the Fed and central banks around the world were going to wait and see what the data showed them. So that gave a little bit of comfort, and markets were able to become a little bit more buoyant as a result. So you see global equities being up 7.4% in hedged terms and 8.9% in unhedged terms, and that's over a 3-month period. So if you extrapolated that to the year, you can kind of see why people are quite optimistic about the rebound that we're experiencing. The other message to take from this is on the right-hand side, you see NZB, that's New Zealand bonds, and GB, global bonds. Those are the bonds in your portfolio, and you have a fairly conservative portfolio with 40% growth, a 60% defensive mix. And a lot of people question when we have the rate rises that we've been having, well, why do we keep bonds in the portfolio? And it's for exactly times like this, and what we saw during Q1 was actually a bit of a flight to bonds as Silicon Valley Bank triggered a little bit of apprehension in the market. So it wasn't quite a banking crisis. There's technical definitions for what a banking crisis needs to be, and it involves the regulator stepping in and influencing banking behavior. But there certainly was evidence of systemic bank risk, and that's really been brought out by the fact that we've had such short and sharp rate rises over the last 18 months. So really what markets did there was, during the quarter, a bit of optimism in the equity markets, but then the slight scare in the Silicon Valley Bank and Credit Suisse and others really drove people towards bonds. And we've always maintained that you need to keep a balanced or diversified portfolio for exactly times like these, that it smooths those volatile periods. So the portfolio performed as expected. I'll flip over to the next page. So that should be page 56 in your deck. So we slightly lagged the benchmark over the quarter, but really kept up with what was a fairly swift rebound. 3% was the benchmark return for the quarter, and the portfolio itself returned 2.8% over 3 months. The reason for the slight lag is that effect of the lagged valuations in the real assets coming through, really. So the main driver of your your risk in your portfolio is your equities, and predominantly Stewart Investors as your active equity manager. And pleasingly, they actually kept up with the benchmark. Obviously, over the longer term, we expect them to outperform the benchmark, and they have over 3 years and more. But the first quarter of this year was actually quite a difficult time for active management. So seeing Stewart Investors keep up with the benchmark during this rebound has been positive. And I'm pleased to say that during April, they actually have outperformed. So even though the numbers aren't reflected in this deck, we have some more positive news coming through in terms of markets continuing to increase during April, and Stewart Investors as one of the key managers outperforming their benchmark. So that's all positive news there. In terms of positioning, trying to do the maths here, it will be page 58, I believe, asset allocation. You can see the portfolio has broadly maintained its targets, been in line with its targets. And this is really what we watch during volatile periods. It's important to ensure that as equities and bonds, sometimes get slightly dislocated in volatile periods, that we keep broadly on long-term targets, because it's exactly for these sort of rebounds that might happen in the bond market that you don't want to be caught being underweight just because of a rally in the equity markets. So that's just, the efficient portfolio management there. I'll summarize in terms of outlook. We really see an outlook potentially a calming in markets. The two things at play at the moment are markets being generally in consensus that we're in this period of just waiting to see what interest rates will do to economic activity. But then on the other hand, there's actually very, very low unemployment, especially in the US. Now that's a positive thing generally, if we're talking about from a social perspective. From a market perspective, it's a bit of a worrying element, because that is still a key driver of inflation. So unemployment hasn't really risen as a result of the Fed's interest rate rises. And that's one of the variables that they would normally watch in deciding whether they start to cool down the interest rate rises. So that's the key variable that markets are watching now, to see how will the Fed react if unemployment is still exceptionally low, historical lows, and therefore driving wage inflation, which feeds through to the inflation that the Fed is obviously trying to control. So that's really what the market's watching at the moment. It feels that the tone of the central banks around the world is starting to indicate that they might live with slightly higher inflation than the targets that they've been talking about over the last year. And that's, again, a calming influence on the market, because if the central banks are willing to live with 3 or 4% interest rate inflation for a little while, it does mean that they probably won't cause any more economic pain in the next year or two in terms of a recession risk. So generally speaking, still expect a bit of volatility as this plays out, but we probably passed the worst of the uncertainty that we experienced in the last 6 months or so.
Thank you for that, Brian. Very much appreciated. Does anybody around the table have any questions? Brian Kearney? Looks like you've convinced everybody that we're on the right track. Thank you, Brian. Certainly the performance over the last quarter is a marked improvement. And if that can be continued and delivered in the final quarter, we'll be looking for a substantial uplift in our performance over the next 3 months or 2 months.
Yes, let's hope so.
Yep. All right. So if there's no questions, I will say thank you again, and we'll talk to you in 3 months' time.
Thank you. Good to see you.
Thanks, Brian.
Right. We have a resolution, Mercer Investment Monitoring Report, 31st of March 23. Have a mover for that, please. Thank you, Stu. And Mr. Cookston, Councillor Cookston has seconded. All in favour? Right. Thank you. Carried. Right. We're now probably at the time for morning tea. People would like a break for 10 minutes. Thank you very much, and we'll be back here at 10 to 11.